So most people go to an exchange and they set up an account. And my guess is most of the time they just go there, path of least resistance set up in their personal name, use their ID, account set up. What entity or structure should people be using to set up their accounts at the exchanges, or at least put in place prior to initially buying?
Absolutely. That's a really great question. And like, I'll just go to like, how do you protect your crypto? And then like, this will explain it and why you should. And it's really simple. And I would suggest assigning them to what's called an asset management limited partnership. And then some exchanges, you can actually open up the account in your asset protection trust or bridge trust. You put it in the name of the trust itself, which works, not your name. And you can, like I said, like listen to our past episode on the breakdown of asset protection structures for that. But the benefit of transferring your crypto exchange into a trust is simply that if a person like you, who's investing in crypto like Bitcoin does get sued or goes into debt, the courts can actually force you to disclose all of your assets that and the holdings that you have. And remember, cryptocurrency is a property. And this also includes like your digital currency. And so you want to include these things into your asset protection trust. And so this goes kind of without saying that since crypto is a legal property and it can be subject to court orders and courts can force you to disclose what you have and place liens on them. And then even the exchanges that you're investing on can be subpoenaed, which people don't realize this, and they'll have to reveal the accounts and ownerships and information that you have and the amounts and the funds available. And so these accounts and these exchanges and the funds in them are very vulnerable to being seized by creditors. And so the only way to really protect your cryptocurrency is to include them into your asset protection planning that you would like real estate or any other asset. There's this misconception that cryptocurrency is untraceable and there's no way to know if you own it or how much you own. And that's just not the case. When you're in a lawsuit and discovery served on you and a judge orders you to disclose your assets, you will either lie under oath and you commit perjury and you go to jail, or you disclose it. It's really simple. And each transaction you make is recorded, remember, in that audible ledger. And the exchanges, again, can be served subpoenas and they will end up having to disclose what you own and how much you own of it. So it's just, don't get cutesy with it. Just protect it properly and you'll be fine.
Do you feel that, some people, I guess, generate fear that, their assets might not be safe on the centralized exchanges from either from the government? What is your opinion there?
No, I find that because what happens if the exchange doesn't exist anymore? And like there's stories about people who own Bitcoins on exchanges that went out of business. And the next thing you know, like there's missing Bitcoins now because there's only 21 million are ever going to be made. And I forget how many millions they said are lost and will never be found because of that issue, or like computers crashing and not backing them up into your digital, wallet. I agree. Like it's not really yours unless you take them off, and store them into your wallet. But then again, the fact that you purchase a certain amount can be discovered through the exchange that you purchased them through.
Do you think even just from a seize opportunity, do you think the government, or the IRS will see more cases here in the next couple of years through these centralized exchanges where people didn't pay their taxes and they seize the account?
I do, because the Biden administration specifically said that they're going to be doing this and that they're going to be ordering audits and they're going to be looking through people who own crypto and auditing them. So that's why I'm like, have your ledgers and your books in order, get a CPA in line, get your taxes in order, because a little thing of not reporting one little transaction because you had a bunch of wallets and you didn't realize you had to do this and you didn't consolidate them all into one easy traceable ledger. It doesn't mean that you're being audited because you did anything shady. It just means you missed a transaction and didn't get reported. So just stay ahead of it, do it properly as an investor, and then work with a good CPA. Track everything that you do. Just like if you have a real estate portfolio and you're tracking it through your, portfolio. Whenever a client calls in and like, hey, send me your portfolio, and they send me a list of everything that they own, how they own it, and their names and all of that. The same thing with your crypto. You just need to start getting smarter with it and take care of your assets.
I agree. I mean, what are some other ways that maybe people can think of to help protect their crypto assets?
I think those are the main ones is, get them out of your name. If you're concerned about the exchanges crashing, and also like I do agree, like take your currency that you own, put them in your digital wallet, because if that exchange ended up going bankrupt and not existing, then you can have millions in that portfolio and it's gone. So take more control over your assets, have a CPA, protect them, put them into a management company or into an asset protection trust so that it is protected from court orders and judgments, because it is a property and you will be forced to disclose. Realize if you own them offshore, the IRS has specific codes and IRS disclosures that you have to follow and annually disclose what you own in these purely foreign offshore trusts. That's why we don't use purely foreign trust specifically is because we don't want to have to deal with clients annually reporting everything that they own in them. You want some sort of anonymity and not have to tell people what you own. So then we just domesticate those trusts until you need that strength. So realize you don't need to get cutesy with it. If you start trying to hinder or hide assets to avoid taxes, that's where problems come in. This administration is going to be very aggressive on finding and locating assets and crypto, and then auditing you if you didn't report your transactions, which is nothing wrong with that. Just realize that's what the government does to make money.
The government has the ability, or has been getting the data from the exchanges already. And now that it's all on a public ledger, they got the easiest auditable thing that they can go after versus all the businesses that are using cash and whatever it may be, that this is actually the low hanging fruit and people don't realize that.
Correct. And that's the thing that they don't understand is like just the use of the Bitcoin is it's completely audible and open. And so this is what they need to realize is just because you own a digital currency, it's actually easier to trace. It's right there. It's open.
Now, I know we did the other episode in depth on the trust, but maybe for those that are listening here that didn't hear that episode, what at the highest level, is the process in which to kind of set up a trust and how does that mechanism work and, a rough cost? Yeah.
So the bridge trust, the benefit of it is that it's an fully foreign offshore Cook Island trust that's been the mother of all trusts, the Golden Globe standard, the strongest one, which here, even in the US, it's been around for almost 40 years. We have Supreme Court cases that they can't even penetrate through. And so you have a lot of case law. Almost all the case law of the world goes through the Cook Islands. So it's very solidified in almost 40 years of case law. So you know what you're going to get with the Cook Islands. So we have, and we use what's called a fully foreign Cook Islands asset protection trust. The bridge trust, what it does is it domesticates it to the IRS, for the IRS to classify it as a domestic trust. And the reason you want that is if you're purely foreign, it's overkill for most people. It's very expensive to have a purely foreign offshore trust. It's going to be around $50,000 plus $5,000 to $10,000 a year to maintain a purely foreign trust. It's very expensive on the maintenance, but it's just ironclad, very, very strong, even against super creditors like the IRS, or if, there's the Anderson case of people committing criminal Ponzi schemes and they still couldn't get into the trust. I don't condone Ponzi schemes or criminal activity. I'm just saying it as a point of reference, very, very strong. Overkill for 9 out of 10 people. So what you want is to have a purely foreign asset protection trust, and then we build the bridge back to the US to domesticate it because it's cheaper to maintain. Generally, you're talking about $2,100 a year annually to maintain it. And you don't need to be offshore until you're offshore. You just want the ability to be able to do it. And so what we do is if you ever were to be sued and had a level of duress, we would drop domestic compliance, which means removing you as the main trustee. Your offshore trustee automatically steps into the main trustee. Now you're purely foreign when you need to, and that gives you the pure strength and power. A bridge trust, because it's domesticated, is cheaper. So it's generally going to be around $29,000 to set up with a management company. And then it's $2,100 to maintain. And that's kind of, at that point, the strongest trust in the world that you would end up having. And then it gives you the benefit of both worlds, domestic flexibility with offshore power if and when you need it.
I've seen some conversation around, people that own crypto where they pass away, right? And they either didn't properly track their keys or there may not be a mechanism in to kind of pass on that crypto. One, what benefit does this trust put in place to help with that estate process? And two, maybe, any words in which people could better organize their keys or somehow to kind of tie this all together if people die that own crypto.
Yeah. So if you have the exchanges not in your personal name but into the trust, once you pass, it's going to pass per the directives of the beneficiaries listed in the trust, just like any other asset as a property. And so then the rest of it is just going to know what you buy. And if you're buying on multiple exchanges, consolidate it into a good app that consolidates all your transactions that we talked about, because then you have a full ledger list. Nothing's going to get missed because per transaction, everything's automatically tracked and traced, and it creates a nice little package that you can then give to your CPA and track, and you have a nice full ledger versus, I forgot my Gemini wallet. Forgot I even owned anything in there. If you just, as you open up a wallet, you create the key, put it into like a tax bit, centralized form. Every transaction automatically will go straight into there and create one nice pure ledger. It's nice and clean. All your wallets you take out of your name, put them into the management company or into your asset protection trust. And it gives you that benefit, that peace of mind of saying, okay, my assets will pass as I directed in my trust.
So beyond the asset protection piece, the estate planning just as important right here, right? For those that have assets in case something happens.
Yeah, and that's part of asset protection. Like asset protection just protects the assets, but with an asset protection trust, there's different types of trust. With the bridge trust, we would just make reference to all assets listed in this trust passed per the directives of your living will or your, traditional revocable trust. So that would be listing all your beneficiaries. All the assets are owned in your asset protection trust, and they would just pass per your directives that you've already laid out.